Here we are right now. They're marking the print down just like I said. They're marking it down. Our bid is 270. Is it holding? Cancel all. Cancel all. People, I said cancel it. All right, until I get a bounce up at the bottom, and this is live right now. Put it out there at 250. But you will buy the bottom end of that when he runs that thing back up. Over here on the 605, they're marking them down to $1.20. That was one of my limit orders. I'm out here to buy it at 40 cents on the opening bell. He's going to have to run that thing up, and if you don't tell me what that stock is doing and what it has to do, oh, well, thank you. Well, thank you. Buy me a contract right here. They hit that low at 290. It almost got to your 270. Now we're going to get that leverage up. This is live. That's how to steal that bottom. That's how that thing is breaking out. This is in 2 minutes on the opening bell. That's what I was talking about, a $3 bounce. It's got to run north of 605. It's got to take that other side of that print back up. Right here in that 605, I'm going to be making those lower bids on that opening bell. I'm watching that 600 put make a low right now. 211 was a print, and I got a bid down there. I'm out here at 60 pennies. It's $1.50. Hey, the 1119 610 put. Hey, close at 950. The low was 9. It's down here at 770. I'm going to be looking at this lower end of that market. If this gap, if the gap don't keep going, if the gap does not keep going, you better do what? You can always limit out. You have a dollar wide bid and ask on a $600 call. And a lot of people bought them at 340. Limit them out there. Didn't I tell you? It's not a runaway gap. $5 is a high. So learn how to limit out at 430. Make them buy it. Get in front of the ask. Learn how to work that dollar bid and ask to exit your position. Don't sit there and do nothing. Make somebody pay you a higher price. Oh, wow. What does he mean by that? The put side put the bottom in. They had the bids down there at 770 live here. That one put in $1.85. Bids were down at $1.20. And the $600 put is working. And so is the 610 put on the low from 950 to 840. And it's working wide bid and ask. Why? Because that stock's not breaking higher. Everything is, now we have a high at 604.50. We finally hit that $1.20 low. We also hit that low. We had bids at 270. It kind of levered up, hit the 565, didn't hit the 590 area. We have not broke above the put side now. It's getting marked down. So if you trade, look at how wide the bid and ask is. The 605 put hit 296. It's 320 by 350. They've got to take the stock higher in the bid and ask. I'm going to give a limit order on this one. They would mark this down to $1.10. That is, if you break above the 605 to 67 on the upside. If you do, well, then you'll see the limit out on the 605s. Who's all in the 605s? Here you go. Talk to me. Are you going to break that with a 2-teeny breakout? Here it is. The liquidators were in, but the bid has been rising. And the contracts are holding their value. Their contracts are holding their value. What did you say, Mr. Flagg? I'm not buying. Oh, okay, on the 610 is right back at the low. You're right. Good. Watch that, see it. Because if you break resistance, they're going to mark that side down, right, Ken? And if they break that top, I'm going to give you a limit order at 350 right now. Because if they break that top and they break through here, you put your limit order at 350 on the 610 put. Do it now. Do it now. Oh, that's 100% markdown almost from the ask. Do it now. But you got to break through here. Do it now. You never see the price, though, if you don't break 2 teenies higher. through that resistance level. This is live. It's here. It's now. It's the bid at 410 holding, and a 490 on the top end, and a 460 by 90 in the middle of the print. But the lower end has held that because you never broke this major diamond level right here. You did not. It's struggling because of the liquidators. But let me tell you, when he comes back over here and that bid rises and they print this side of the market, that means that shows that they want to be in. And when you break through there, you're right about to break it. And you know it, MMT. You've been taught that when you break it, it must be 1 teeny, 2 teenies, all the way up here to qualify. Just because you break out, you must break through there 2 teenies higher at 97 cents per teeny line. And that bid must rise. And that ask, people jumping in front. Look at the print. He prints 62. They must come back on this side. That's why we're having a problem with this live entry on Google. We'll come back to it. I don't want this video to be too long. The puts are down here at their all-time lows. Ken Flag, do not ever let them. You got to break that. If you don't break it, then you know you buy one over here. But you never pay that ask. No, you'd have to bid in a dime above them. And then it would have to go higher for them to throw off. And your stop market order would be 70 cents. Because if they break through it, then of course they're going to mark it down. And it's having a hard time. He comes back in there. So let's watch. 808,000 shares traded, up 285. Calls, puts here. There are your puts. Here are your calls. 460 by 90, $1.55 by $1.65 on the 605. He doesn't have a long ways to go to getting the freaking money. Make these pay. But it's early in the day. We're not even in the first hour of the tape.